$110 billion. dollars. That's how much fresh capital just poured into OpenAI, the company behind ChatGPT, in what is now one of the largest private funding rounds in tech history, with valuing the company at a staggering $730 billion before this new money goes in. The trillion-dollar question is, so here's a question I want you all to keep in the back of your mind for the next few minutes. What kind of future investors betting on if they're willing to write checks for this big for a company that so far is still figuring out its business model? Today, we're going to unpack this record-shattering deal, why Amazon, Nvidia, and SoftBank are all in the center of it, and what it tells us about AI, and maybe where your business is going next. The deal, in human terms. Let's start with the basics. OpenAI just closed a funding round of about $110 billion, pre-money valuation of $730 billion. After the money goes in, the implies a value of roughly $840 billion, putting OpenAI in the same valuation neighborhood of the world's largest public tech companies, despite still being privately held. The money comes from a very particular trio. Amazon is committing around $50 billion, Nvidia is putting in 30 billion, and SoftBank is adding another 30 billion. And OpenAI has said more investors are expected to join as the round continues. Wait, why Amazon? Now, if you've been following the AI race, you might expect a deal like this with Microsoft, OpenAI's long-time partner. Instead, the biggest single check here is from Amazon. So why is Amazon willing to make what appears the largest single investment in one company in its history? We'll get to that in a moment. But first, one more important deal. This isn't just about money in a bank account, it's about infrastructure, cloud computing, specialized chips, and massive scale. The strategic web, clouds, chips, and conditions. If you've ever tried to run a large AI model on a laptop, it's slow, expensive, and it just doesn't work. Now imagine doing that billions of times a day for people and companies all over the planet. That's essentially OpenAI's world. Now, let's talk about how this deal actually works. Firstly, Amazon, OpenAI, and Amazon are all deepening that strategic partnership that centers on AWS, Amazon Web Services, and Amazon's custom AI chips. The companies say OpenAI will expand its use of AWS as a preferred cloud provider and make more use of Amazon's Trainium processors to power and train its models. Amazon has committed about $100 billion of cloud and infrastructure capacity through AWS, with around $50 billion framed as an investment tied to this funding round. But here's the catch. A big chunk of that 50 billion is contingent on OpenAI planning and meeting certain conditions the companies haven't fully disclosed. This doesn't tell us just a few things. This isn't just a blank checks. Amazon wants performance, usage, and long-term alignment with AWS. OpenAI is effectively locking in huge portions of its future compute demand to one of the world's largest clouds. Then there's Nvidia. Nvidia has become the de facto arms dealer of the AI boom, selling the GPUs that train and run state-of-the-art models. Its $30 billion commitment here isn't just about investment returns, it's about cementing its role at the center of OpenAI's infrastructure. And SoftBank, known for making enormous, high conviction bets through its vision funds, it's effectively doubling down on AI as a next platform shift. So, you've got OpenAI, company's product is intelligence, becoming deeply reliant on a handful of outside players that compute in chips that make the intelligence possible. Is that a brilliant way to scale fast? Does it create kind of a dependency that might limit OpenAI's freedom in the long run? Bigger picture, valuation versus reality. Let's zoom out a bit. First of all, 2 years ago, OpenAI was valued at roughly $300 billion. Then about 4 months ago, during a secondary sale, the number jumped to around $500 billion. Today, At $730 billion pre-money, it is more than doubled in less than a year. Here's the tension. Analysts point out that OpenAI's actual revenue and profits may still lag far behind those of the public companies with similar or even lower valuations. In other words, investors are not paying for what OpenAI is today, they're paying for what they believe it might become. So, what are they imagining? Possibly a foundational model that's embedded in every major software model. Agents that could handle routine work for millions of businesses and new consumer products that feel like as transformative as smartphones were or the internet itself. At the same time, this kind of valuation sets a very high bar. One commentator put it bluntly: OpenAI will have to spend billions and heavily on research, data centers, and on energy just to grow into the expectations that are now banked into that 700 plus billion dollar price tag. And that's where the story starts to feel less like a funding announcement and more like a long term bet on how fast the world can absorb and monetize AI. Alright, let's circle back to the three questions we started to raise. What kind of future are investors betting on with $110 billion? We're betting that AI will be fundamental for the next few decades as electricity and internet were to the last. And OpenAI will be one of the core providers of that capability. Why is Amazon leaning in so hard? Because AI is increasing the workload that matters in cloud computing, and it would be impossible on its own. Over time though, those deep dives may shape what OpenAI can build, how fast it can pivot, and whose interests it ultimately has to serve. And three, is OpenAI's growing dependence on a few infrastructure partners a strength or a vulnerability? In the short term, it's a strength. And it lets OpenAI scale at a speed it would be impossible on its own. Over time, though, those deep dives may shape what OpenAI can build, how fast it can pivot, and whose interest ultimately has to serve. And maybe that's the real story here. Not just the size of the check, but the network of obligations and partnerships and expectations that come along with it. So, as you go back to your day, I invite you to think about this as less as a handle about someone else's company and more as the preview of the landscape you'll be building in or competing in over the next decade. If AI is going to be capital intensive, where do you want to sit on the value chain? Are you going to be a model builder, a service buyer, or a creator of something else entirely new on top of this emerging platform? I'm Sashank, and this has been Business Insights Daily. Thank you for listening, and I'll see you next time.